But before you go, Fabio, and I think there's also some question in the mind from the people, how they can use the swing trading models on the best way. So what you would say, it's like step one is like looking into the swing trading model, step two is looking into the net checks, and then looking maybe in the matrix, or what would be your routine as a swing trader where you want to look into? So it's not only the swing trading model, so you
Yeah.
would also looking into other stuff, correct?
Yeah, of course. So the first step is obviously I would build my kind of watch list, right? So again, we're gonna come up with a screener very soon, but essentially, like these are companies that I monitor. So those could be companies that you already own in your portfolio, or company that you're interested in buying, right? So if you're, for example, let's say you missed Tesla because you obviously missed the trade, but you want to know when it's a good time to go back into the company because it's a company that you might want to own in the future, or Palantir or whatever that might be. Then I would always monitor and set alerts on certain price levels that might be interesting for me. And then I would go and come into my swing model. And the first step is I want to look at the 5 days. So are we in a bullish or bearish? So let's take, for example, a company like Google, right? Very simple. So we look at our swing trading model, and we just kind of crossed the 180. It was a big core resistance area from last week. So here we have our lower band at 176, right? So again, if we go back on Google, we are at 183. So we're about $6-7 away from that level. The next step would be, okay, so I'm going to plot these swing levels on my chart. The next step would be obviously looking at my net jacks, and I want to see what the position look like for Google. So in this case, like since last week, we have basically no bearish net positioning right there. So we have a very strong, kind of positioning around this 180 level, very, very strong core resistance. And then obviously we have these levels above. So then the next step, I could look at things like our skew chart, which shows me if the market is more skewed towards the calls or the puts. So in this case, you can see that there is really not, the implied volatility of calls is really much higher than the implied volatility of puts. Then I could, come up with different ways of trading a company, which could be either by selling options and integrating premiums, so like pocketing our premium, or by defining an entry point for my long trades or short trades. So in that case, I can use the gamma levels, I can use the swing levels, I can plot them into the chart. And then I also, yes, the matrix, I also want to monitor any change in gamma, any change in positioning. So I would always go here, look at the 1 day change right here, and go back in time, see if anything changed compared to the previous day and the previous day again, and then see what the market is kind of doing for that company.
Yeah. Good one.
And then the other thing that I would also, again, going back to our swing model, if you are looking at spread selling or credit selling, always look at either the lower band or the upper band. I would mostly focus on those because those not only give you a band, but they also give you a direction. So if we are able to predict the direction, then your spread most likely will expire out of the money. So that's the goal of the strategy. If you are looking at a long short strategy, then obviously you want to monitor the risk trigger because that could become a very important reaction area. So not only looking at the bias and the lower band, but also look at, okay, where is my trading profit or where is my target, my next target.
And then what is the last step, Fabio? So after you was placing your trade and you was successful with this, go into the member success area and post your story about the trade.
Yeah. And the other thing, Patrick, actually, which is good to mention, is always look at the change in bias. So like we are giving you access to history. So always monitor that. For example, let's imagine that you open a trade on a Monday. On Tuesday, monitor if there was a change in bias. On Wednesday, monitor if there was a change in bias. And you can easily do it by looking at the history. So if you see that today we had a lower band and yesterday we had an upper band, then maybe something has changed in the option positioning that you might want to be aware of. So like always looking, in this case, obviously everything has been really bullish since the last week. But if you spot a change in red to green, so very easy to picture in the eyes, so from red to green or from green to red, then maybe that could also become a very strong signal. So if you are, for example, if you're going back to our Google example, let's say that tomorrow we start seeing an upper band right here, then maybe like something has changed and maybe like there's something that you might want to be aware of. And that could also be a trigger point for you.
Yep.